the compound annual rate of return we are expecting is close to 40%. So in February, we were expecting a doubling over 5 years. Today, we're expecting nearly a quintupling over 5 years. We are learning that training costs, so AI training costs, are dropping at a rate of 60% per year. So these are massive deflationary forces. And this is disruptive innovation at its best and most prolific, really in the history of all time.
Hi guys, and welcome into today's video. My name is Jason. I hope everyone is having a fantastic week as we build up to Christmas. Guys, I want to make this video because recently I have been obsessed with making videos on my channel about the legendary investor Cathie Wood. As you guys know, we like to follow her and her innovation strategies on this channel as closely as possible. And over the last 3 days, a new article had come out that Cathie Wood had linked at arkinvest.com, stating that innovation stocks are not in a bubble, and we believe they are now in deep value territory. Cathie Wood believes that there is going to be a quintupling
Over 5 years
in her ARK ETFs over the next 5 years as we emerge with these new innovation technologies. We have DNA sequencing, robotics, artificial intelligence, energy storage, and blockchain technology. So all of these technologies are converging, and we are just at the start right now where all of these innovation platforms are starting to break through. So Cathie Wood starts in this article talking about how disruptive innovation strategies are now falling out of favor, and she is focused solely on the next 5 to 10 years, guys. So this is not a swing trade that she is looking to do at ARK. Again, these are long-term time horizons, and her fear is that people are selling out at the bottom of a market cycle, which is exactly what she believes is happening right now, and turning temporary losses into permanent losses. And that is what she is saying you must avoid, because the result of innovation, guys, is expected to transform human lives at an accelerated rate during the next 5 to 10 years. And we also reiterate that we take advantage of volatility during corrections and concentrate our portfolio towards their highest conviction stocks.
We do not believe that most asset allocators have enough allocated to innovation. And I think that the traditional benchmarks talk about risk because of these innovation platforms: DNA sequencing, robotics, energy storage, artificial intelligence, blockchain technologies. Because those are going to rip through the traditional world order and disturb it mightily, that those benchmarks are probably where we're seeing the bubble today.
And if you look at the year to date, guys, on stocks that we all know she is very, very famous for, stocks like Tesla, for example, that have run up over 1,200% from its lows in 2020, coming all the way up into 2021. We can see how, a stock can run up more than 1,000% again in a single 12-month period. So this is an example that I'm using as to saying why Cathie Wood believes that the innovation platforms are going to absolutely explode. And the next layer where Cathie Wood sees a lot of big money moving is in autonomous taxi networks, and of course genomic sequencing, which is her ARK G fund. Now, a lot of these companies that she is holding are currently down because they do not make much money, but this is the very, very beginning of a new industry, guys, a new industry that is going to change and transform our lives forever. These companies are going to cure diseases like type 1 diabetes, which is a disease that I have, where I have to self-inject and medicate every single day if I want to eat anything with sugar or carbs, pediatric blindness, and catching cancer at stage 1. So most of the companies that Cathie Wood believes in, she actually holds most of these inside her ARK G ETF.
What I find so interesting about movements in the market today is the fear of interest rates and inflation picking up. Really started in February of this year as people were getting vaccinated. And the markets went after our strategy to express the risk and basically shorted our strategy. What I find so interesting about this is that the market's multiple, broad-based market, so S&P's multiple on next year's earnings is at 24 times. NASDAQ's is at 31 times. These are near record highs, except for the tech and telecom bubble. Now, you're going after multiples in our space, and what has happened, the depreciation in our stocks from mid-February to today If inflation is really the risk out there, why isn't the entire market's multiple coming down? For every cumulative doubling in the number of whole human genome sequence, costs are dropping 40%. And we're at a very low base, so we're going to see a lot of cumulative doublings. For industrial robots, that number is 50%. For battery technology or battery pack systems, that's 28%. When it comes to artificial intelligence, we are learning that training costs, so AI training costs, are dropping at a rate of 60% per year. So these are massive deflationary forces. And this is disruptive innovation at its best and most prolific, really, in the history of all time.
Coming back to the article, Cathie Wood says that the media have actually been portraying a very negative impact because of inflation, and she believes that the reason most of her stocks are down is because they have already factored in those market factors. Now, if you think of inflation in terms of the long term, she believes that it's transitory and how we are in fact going to have a change because innovation is going to bring those costs down because the costs are collapsing for every cumulative doubling for all of these industries that she talks about. And as we start to ramp up the production of electrical vehicles, for example, when artificial intelligence costs are coming down at such a significant rate of around 50% per year, and that again is going to halve the prices in the long term of so many of these companies that are producing robots for autonomous taxi networks and so on. Now, what I'm going to do, guys, is I'm going to actually link this huge blog that she has actually popped up at ARK Invest underneath in the comments. So if you would like to go through it, then you absolutely can. But Cathie Wood is saying that right now is the time. If you compare the valuation of the S&P 500 price to sales ratio, again, of anywhere between 24 to 26, her stocks are down to around a 6. So again, they are not in a bubble at all. They are now in complete deep value territory. And again, if you compare this to the NASDAQ stocks are up significantly, but the innovation stocks are completely sold off. So at some point, we are going to see a shift back. And she believes that this is all due to short-term algorithms that are trading because they are concentrating on profits now and they want dividends now. Now, I did do a full video breakdown on this, which I will link above. Again, if you haven't seen that video, then do check it out because it has some very, very useful information in. But right now, I wanted to give you this information because I wanted to show you the opportunities in the market right now for a lot of the stocks that I am watching. Now, ARKG is one of her ETFs, which I believe over the long term is going to accelerate over the next 5 to 10 years. Once we do have a curing for a lot of these diseases, the stocks inside this portfolio are going to run up a significant amount. So this is definitely to add onto your watch list. But a few of the stocks that she does not currently hold that I am looking to get back into is, of course, Nvidia Corporation. Now, these are a massive company that concentrate on the manufacturing of semiconductor chips. And right now we are sitting at the 50-day moving average. So I'm looking for any further selling if we do manage to come back down and retest onto this 100-day moving average at $250. This is definitely a stock to watch to pop onto your radar because this stock over the long term, over the next 5 years, I believe is going to absolutely double and then double again because this stock is only going to continue to have their revenues increased as we ramp up the production and again they start to cut those costs down for every cumulative doubling for everything that they are doing inside their company. Unity Software, which is associated with the metaverse. You guys know that we had loads of hype on YouTube and I said don't buy into anything with hype because there will be a gigantic sell-off. We have now come back down and Unity Software is starting to look a lot more attractive at these valuation metrics of $135. So again, if we can get Unity anywhere around that 200-day moving average or the 30 on the RSI, anywhere around $130 or below, then for the long term, this is definitely going to be a stock to watch and start to add those shares into the portfolio. To my belief, again, this is not financial advice, but this is just what I am doing because I believe that this company, including how many trillions of dollars the metaverse can be, this is going to be one of the #1 players along with Nvidia, and these two companies are going to absolutely fly off the radar in the next 5 to 10 years because the revenue and market opportunity, ARK Invest believes that this is going to be in the trillions of dollars. So that is going to be added revenue to increase into Unity Software's experience, and as a company they are going to propel forwards. So these are two of the stocks right now, guys, that I want you to add to your watch list: Nvidia Corporation and of course Unity Software, ticker symbol U and ticker symbol NVDA. Now guys, I just wanted to make this quick video today just to give you an update and some confidence out there that I have not sold any of my stocks, and like I said, I am continuing to hold. I have been dollar cost averaging since February, since we have seen a growth correction, but a lot of that impact because of inflation has now started to really hit the market. So these stocks have been hit extremely hard. But again, you have to remember of everything that is linked in this article that I'm going to link below, because the long-term estimate that ARK Invest and myself have, and so many other people that I follow for disruptive innovation, is going to have some absolutely enormous implications, because these companies are investing aggressively now, and again, they are currently in deep value territory. So again, I really do hope that you did take away some really useful information in this video. I hope that you guys have a fantastic week on the best build up to Christmas, hopefully, that we can all have, and I look forward to seeing you guys back on my channel soon for some more content on investing. If you are new, then make sure to go down below and do me a favor and hit that big red subscribe button, and welcome to this family of investors. And if you did find value at any point, then please be sure to have liked this video. It really does help me out, and I appreciate all of the help that you guys do here on this channel. And if you would like any access to anything that I am buying and selling, a quick plug on my last word: you can join the private Patreon for the price of a coffee, where we talk about all the stocks that we are buying and selling on a weekly basis with some absolutely fantastic channel community members. So guys, have a fantastic week, and I look forward to seeing you in my next video. Ciao.